Good evening, investor. Welcome to the Funds Helpline channel. So today we'll be discussing a very important topic that is on successful investment strategy. How you can develop a successful investment strategy. There can be number of strategies one can have. Different people are investing with the different strategies. Some of the person is investing into the growth, some into the value, some into the combination of both, some into having the different investing different cyclical sector. They have a different strategy at all. So what the basic investor can follow, what strategy can follow, that we'll be discussing today. Apart from that, we will be discussing in an investment strategy what are the parameters one should have and how you can develop an investment strategy, and what are the factors you need to consider before developing an investment strategy. That will be discussed in detail. That is, let's start the so first of all, what is the investment strategy? This is basically the way you wanted to invest into the market, and what are the factors you follow when you are investing into the market, that develop your investment strategy. First of all, here we will be will be discuss about the core investment strategy and the satellite investment strategy. The first part is the core investment strategy. That is the basically the structural growth story, where you follow the mega trends kind of a sector, the trends that will continue for 10, 15, 20 years. So here is the structure. You invest in a company where there is a long structural growth is ahead of the company, or the company is not a cyclical. This is basically a continuous growth story. This kind of stream is considered as a consistent compounding or structural growth story. There are some sectors you need to identify at the beginning before investing. What are the sectors and how these sectors can be a structural story? You need to understand that. First of all, after identifying the sector, you can go deep dive into the stocks, select the leaders of those sector, and find whether these leaders, how the past performance are, these leaders how they have performed and how they have outperformed compared to the overall industry strength. So basically, if I see that the structural growth story, there are some sectors like your information technology, like the I talking about the future, the electronic vehicles, like your consumption story, and some extent some banking and financial companies. These are basically a structural growth story. If you see, uh, though the banking and financial some extent is a cyclical story, but there are some few banks, if you see, they are basically are not affected by the cycles. They are basically very strong, and they have a different mood altogether, so that they basically perform across the cycle. Hardly they have an impact of the down cycle of the economy. So these are basically the structure you need to follow when you are going for a when going for a core portfolio investment. So in a particular sector like IT, like your overall technology sector, overall EV sector, or banking financial sector, or a particular consumption story, you need to identify the leaders. You need to see whether those companies track record, whether you need to see that the growth of sales of the company should have growing every year more than 10%. The sales growth should be there. There should be growth of return on capital employed. The ROC should be growing continuously more than 10% each year. There can be low debt. There should be a low debt into the company. There should be a consistent cash flow generation and consistent growing cash flow generation in each and every year from the company. So these are the basics structure you need to follow when you are investing in a particular company into the consistent growth story. So if you, and also there should have the company which is you're putting the money should have some additional moat, so that whenever if the sector don't perform well also, those story can do well. So moat is very important. So that the structural moat is important, because the structural growth for those companies should have remain the same, even if the sector do not perform well. The moat will keep those companies will be outperforming, and those they will be the basically the grow structurally over the different market cycles. So moat is very important. You need to understand the pricing pattern and the pricing advantage of those companies. Basically the leaders in an industry, they have the pricing power. Even if in a bad market situation also, they can generate the additional they can generate the more cash flow, and they can have the earn the more profit. So you need to identify these companies in a consistent growing sector. So where you need to in consistent growing and the core portfolio, what should you avoid then? You should avoid basically the cyclical sector, like your metal, like your sugar, power, real estate, and capital goods. These are the basically they are the basically the cyclical in nature. So you should avoid these sector. Thus you can build a core portfolio, or you can, even if you are investing by stocks, or you are putting the money into the mutual fund, the core portfolio should have this kind of structural growth story. Then only you can put the money over there. Second part is your satellite portfolio. This satellite portfolio can have two part of this. If you are a very seasoned investor, you can put this into two portfolio. One, you can have satellite, you can have a cyclical sector. In cyclical sector, you need to identify the opportunities for next 2 to 5 years, where the cyclical sector, if you can identify at the beginning of the cycle, then you can earn the multi-bagger return on those sectors, on those companies. So you need to identify the cycle at the beginning, and keep the investment there at least for maybe 2 to 5 years till the cycle lasts. So you should have a understanding of the deep understanding of the cycles. Or generally, if you see the construction, capital goods, metal, auto, and basically some extent the real estate sector, power and energy sector, these are basically very cyclical in nature. They generally outperform the market in a good cycles, and underperform the market in a bad cycle. Underperform the market even if the market is good. If the cycle is not good for these stocks, so they underperform the market. So if you can identify these cyclical stock and or themes in advance and the beginning of the cycle, you can earn the multi-bagger return. Here the return could be more than, or maybe the 2-3 times compared to the market return. So this is one of the good opportunity for building the way you can do the satellite portfolio in these sectors. Another way you can diversify, that is into the different theme, that is called the special situation investing. What is special situation investing all about? Though it is not a very new theme, but these themes are not practiced in India, or not very focused kind of a strategy. We don't see this is a very focused strategy. There are hardly few mutual funds who are following this strategy, though it is very difficult to identify whether they are investing properly into the patient situation theme or not. But what I see, there are very few funds which are basically named as a special situation fund or opportunistic kind of a fund. But I sorry to say, most of the funds are not investing as per the special situation special situation stocks. I don't see their investment in special situation stock, because the special situation stock is very means special situation is not comes every day. And most of the if you see the in the large cap the special situation investing is very rare. And most of the, because the large cap are very well researched, so chances of generating very additional or out means very good return from these stocks on special situation investing is very rare. So now you understand, just try to understand, we will be trying to understand what is the special situation is all about. The special situation is if the company is going through special kind of a restructuring, like your merger, demerger, bonus, split, spin-offs, or they are trying to do value unlock through the different activities in the market. So you can, if you identify those theme at the early, and then you can earn a really a handsome return, and the period of investment for that may be very short term period, maybe within a span of 3 to 6 months or 1 year you can earn the multi-bagger return if you are able to identify that in a proper way. Though it is not very easy to identify the whether these special situation opportunities will be multi-bagging or will be very good or not. So very there should be a deep understanding on this, then can only you identify the special opportunity in this segment. So as I understood, as I briefly discussed, what are the different types of special situation one can have. That is basically there are few I have named, like your demerger, split, the spin-offs, or special event like your bonus. Then you can have a buyback or right issue. These are basically special situation investing. If you see, if you follow the BSC announcement on daily basis, each and every company, every day you will see there are hundreds of filings from the different companies on the BSC. So whatever is update is going on, whatever the different any board meeting, any split news, any news on the different special situation front, or any other news which is important to inform the market, those news are basically if you see the BSC, those news are got updated on daily basis, on means whatever time the company report that get updated into the BSC. So from there you can get those the announcement, and you need to identify that, and you need to go through the reports and all. And before that you should have a deep understanding of the special situation investing, then only you can take the advantage of those situations. So basically if you see, this is very unique kind of investment opportunity, and there are hardly you see this is not a well penetrated segment. There are very few mutual funds are investing, because most of the special situation whatever is happening in mid and small cap. If you see, if you practically there are in daily basis, if you can identify, if you can really identify, there are every day there are some of the special situation is happening in any of the companies. Especially it's happened in the mid and small cap segment, but you need to very you need to have a deep understanding, then only you can identify the real gem over there. So that is the special situation investing is all about. In past there are lot of companies where I can just given if for example, there are some spin-offs, there are some merger, demerger. Like if you have the example like CG Power, CG Power, where the stocks have given the multi-bagging return when the Murugappa group has taken over this company. Uh, there is one company called India Bulls Real Estate. After the announcement of the Embassy Group is taking this company, is taking over this company, the stocks have given the almost doubles in no time. There is a company called Mirja International, which is basically the you have not a very tiny caps kind of micro cap kind of a company. This company has if you see that the last from October, since October this company has given almost 2 to 3 times as return in no time in this falling market. So there are n number of stocks I can share with you, and every day there are some opportunities is coming up. into the market. So if you can invest in this segment, there can be you can earn the multi-bagging return. So this is the thing I just wanted to share today. So the basic concept, or how you can develop develop the investment, you can develop an investment strategy. So just to summarize, I have told that you can have a you can put the money into the three segment. One is your structural story, where you can see long term structural growth, that is basically your main investment. Then second is your second basically the your satellite portfolio, where one part is you are investing into the cyclical sector, the sector which can give you the 2 to 5 years outperforming return. And second, you can invest in the special situation theme. So this basically will complete your total portfolio investing, total portfolio structure basically. So and then how much you can means then question comes, the how can one diversify portfolio across these three categories. So basically if you see the in structural theme, you must be putting most of your money. You can invest 50 to 60% depending on your risk appetite. You can invest 50 to 70% in structural theme. And if you are a high risk taking person, then you can increase your allocation into into your the satellite portfolio in special situation investing, as well as the cyclical theme. So it is basically depend on individual comfort level. If the individual is more comfortable with this kind of a special situation kind of investment or satellite kind of investment, then that person can put more money into in those themes, and the lesser into the structural themes. But if in case of conservative investor, he or she must be investing most of the money into the structural theme, and rest can be invested into the satellite part. So that is the thing just I wanted to share with you today. So hope this will help you to build your portfolio. And definitely if you like this video, please share this video among your friends and families. uh, and please subscribe to our channel. And you will find there are a lot of new topics is coming up in our channel. And every time we are trying to put a new theme or new and a new trying to bring a new topic and new idea of investment into this channel. So thank you very much for watching this channel.